Welcome. This is Brett Johnson with OneMedRadio in New York City. Today we are with Stephen Nelson and Michael Mullings of Continental Stock Transfer and Trust Company. They're celebrating their 50th anniversary this year. The company specializes in stock transfer. Thanks for joining us today, gentlemen.
Thanks for having us, Brett.
So, Steve, why don't you go ahead? Steve, you're the company's president and chairman. Can you give us sort of a broad brush overview of the issues that the executives' ownership of a privately held company should be thinking about if they are expecting and anticipating trading shares of their company in a secondary market or potentially going public? So what are the big things that you should be planning for if you're the CEO of a company like this?
Okay, well, thank you, first of all, for having Michael and myself. Continental, as you're aware, is celebrating its 50th anniversary. We were founded in 1964. We're the fourth largest agent in the United States, handling about 1,100 public issuers and private issuers, 2.5 million shareholder accounts, and we have a very concentrated portfolio of companies in the mid and small cap range, so that we have extra experience in handling issues affecting issuers with small shareholder bases and medium shareholder bases. With regard to issues that executives in smaller companies should be considering, private companies have special record-keeping issues that are associated with them, and generally, whether a company is private or public, we recommend that if they have a shareholder base of more than 50 or 100 shareholders, that they should definitely outsource that process. Generally, private companies in particular are accustomed to having their records kept by accountants or law firms, and that might seem to be wise, but in fact, our experience demonstrates that there are long-term problems associated with what seem to be viable short-term solutions. In particular, accountants and lawyers have no expertise in handling record-keeping share issuances, and oh, by the way, they tend to charge a lot more than a transfer agent. So if a lawyer or an accountant charges $2 or $3 or $4 or maybe $500 an hour for their services, a registered transfer agent will probably charge something in the neighborhood of $300 a month, all-inclusive. So the economics militate toward having a record keeper that is efficient, knowledgeable, and also less expensive. The process of getting ready for an IPO or keeping records for private companies that are unsure of their exit strategy still militates toward getting rid of certificates and going toward digitized book entry record keeping rather than certificated record keeping. The reasons for this approach are many. First of all, the obvious one is if you issue certificates, it's easy to lose the certificates. So your shareholders are going to be calling and bugging you to replace the certificates, and then you have to decide whether you want to replace them with a surety bond, an indemnity from a surety company, which is the normal requirement for public companies and many private companies, or whether you're going to waive that requirement, which means that the company takes on an additional liability if the old certificate should ever show up in the hands of a holder in due course. So for that reason alone, certificates really make very little sense in today's environment. As you know, technology advances have led to what is called in the public markets mandatory DRS and other book entry positions through the depository trust company for public companies and many overseas privates. So book entry is the way that sophisticated companies and their intermediaries deal with the record-keeping functions, and certificates just lead to all kinds of additional problems.
So on that regard, what does it take to get started with a book entry? How do you get started with that versus a certificate?
Well, there are two options. If you're a company that's just embarking on creating a shareholder record-keeping database and you haven't had shareholders already, all you do is create an Excel spreadsheet or something more sophisticated than that, showing the shareholders critical information, the number of shares, and an identifier number, and the shareholders get a physical statement, which you can either give them one time or you can update for them annually, which is what we recommend. And this is what public shareholders in dividend reinvestment plans or in mandatory DRS get. They get a statement, not a certificate. So if the statement is lost, it's very easy. You just generate a new statement. There is no embodiment of that ownership that's out for somebody else to wrongfully assume and try and negotiate. In addition, if you have statements and book entry positions which are easy to maintain, it allows for manipulating or changing those shareholder positions in a very facile way going forward. If the company does a forward split or a reverse split so that your 10,000 shares, Brett, of XYZ company become 100,000 shares, instead of you having to surrender your stock certificate, if you can find it, you will merely get a new statement from the transfer agent or whoever the record keeper is, showing the post-split equivalent of those shares, and the digitized records being maintained by your record keeper, presumably a registered transfer agent, will be adjusted, and there has been very little exchange of paper and no difficulty in proceeding with the transaction. The same applies to legending. If you are issuing shares in private offerings, those securities haven't been offered in accordance with the 33 Act or the 34 Act, and they will require what is typically a 144 legend, Rule 144 legend, or perhaps a lockup legend. And again, those legending requirements can be handled by just sending out a new statement with the legends affixed to the front or back of the statement, and they fully comply with with UCC Article 8, 8401, and the following sections. So again, the facility of dealing with much less paper and no certificated embodiment of ownership allows the issuer to keep its records in an orderly fashion and get ready for a transaction by doing recapitalizations, new legending, and other things that may be attendant to continuing as a private company or pursuing an exit strategy for when the company may want to do an IPO.
So let's take an example. Let's say I've done all that, and now I'm planning to raise an additional $1 million and of new shareholders, from new investors. And I have two existing shareholders that have 20,000 shares each that they would like to sell. What would be the sort of high level of the process that would go on to affect those two transactions? $1 million of new income, and let's call it $40,000 of two other shareholders selling out to other third parties.
Mm-hmm. Well, Michael handles our sensitive transaction and compliance area, so he deals with restricted transfers of this type all the time. So I'll turn it over to Michael.
There are two separate transactions. Regarding the new holders, that will be what we call a restricted issuance, depending on whether you're going to do a registered offering or what's called a private placement. So to issue those shares, we will simply need instructions from the issuer and an opinion from the issuer's counsel, which tells us whether it's registered or whether there's an exemption under the Securities Act to issue the shares. Regarding the shareholders with the 20,000 shares to do a transfer, I assume they would have physical certificates in their possession. And so the normal requirements will be, one, they'll have to endorse the certificates and get a signature guarantee via a medallion guarantor, which is most banks or brokers in the U.S. and in Canada, and provide instructions to do that transfer. Depending on whether or not the shares are restricted in its current form, we may require an opinion from the issuer's counsel to let us know that the transaction is or does not require registration under the Securities Act.
Now, Brett, your question really allows a couple of different variables. With regard to the sale transaction, the question is how that sale is effectuated, whether it's through some kind of brokerage intermediary, through a portal of the type envisioned by the Jobs Act and Title III of the Jobs Act and the recent guidelines that have just been released by the SEC. So the intermediaries may be involved in the exchange of shares, the buy and the sell, but the transactional effectuation of whatever is created by that buy and sell has to be handled by a record keeper, which, as we are suggesting, would be a transfer agent, or if the issuer is keeping the records itself. The bottom line is somebody's got to exchange the paper. The old shareholder has to either surrender a certificate, or if the company was smart enough to do what I've been suggesting and had digitized records, they would still have a statement. They'd attach a stock power, get that stock power medallion guaranteed, and submit the stock power and the medallion guarantee probably through the purchasing shareholder for re-registration in the name of the purchasing shareholder. There may be intermediaries in the buy and sell, depending on what kind of platform is used, but ultimately the issuer's records are going to require that the acquiring shareholder's personal information will succeed the personal information of the selling shareholder, assuming the statement or certificate, the stock power, medallion signature guarantee, and opinions, if any, that are required.
I see. So in a simple transaction, let's assume it's a $20,000 transfer, and the issuer has been smart enough to do the book order approach, the book order entry approach. They, I guess, contact the transfer agent, yourself, and say, I would like to, I've got a shareholder, Tom, who would like to transfer 20,000 shares to Mike. Can you please do that? I mean, what would be sort of happen in that scenario? What do we need to do?
Either the seller or the acquirer will submit an item, and it's an item that includes the old shares with the transfer documents and an opinion, if required, to the record keeper with instructions as to how to re-register the shares in the name of the acquiring holder. So if it was 20,000 shares that were being retired from Steve Nelson and bought by Brett Johnson, Steve Nelson's account would be debited on the books and records of the issuer, and Brett Johnson's account, if it existed, would be or will be created and then added 20,000 shares in your account, whether it's a pre-existing account or a new account. You would have 20,000 more shares as an acquiring shareholder. So the issuer's records will always be in balance because you're going to have 20,000 less on one side and 20,000 more on the other side. But as I said, it depends on how that buy and sell is taking place, whether it's a personal sale. You and I decide that I'm going to buy your shares, and you give me your certificate or your statement with a stock power, and I present it to the transfer agent, or there's an escrow agent in the middle, or there's a secondary market portal of the type that I alluded to, or it's traded in the public market, whether over OTC Markets, Inc., there are 3 different tiers of exchanges, or NASDAQ or of course, the New York Stock Exchange. So regardless of what intermediaries and nominees intervene in the sale process on the books and records of the issuer, particularly if it's private, it will always remain the bastion and the holder of the shareholder records company-wide for that issuer.
I see. And so I guess the key is that the person selling needs to provide documentation to the transfer agent that is that through the medallion or some sort of other certified statement that in your case, you wanted to sell 20,000 shares to me?
Yes, but as it relates to the record keeper, as Michael will, handles all these all the time, the paperwork can be presented by the buyer or the seller in our hypothetical transaction, but what is needed is instructions to effectuate the ultimate wishes of both parties, which is the debiting of the old shareholder account and the crediting of the shareholder account on the new side.
I see. And so would the transfer agent then would essentially administrate and make sure that the instructions were coming from both sides and that it all matched up? Is that the role that the transfer agent plays?
That's the point of having a stock power with a medallion guarantee. The stock power basically says in my hypothetical transaction, I, Steve Nelson, covenant to transfer and sell my shares to Brett Johnson, and I affix my signature below to carry out those instructions. My signature is medallion guaranteed, which is a higher form than a typical notary, where a brokerage firm or a bank certifies my signature and certifies that I am an authorized entity to sign on behalf of the registered holder, and that paperwork is what effectuates the transfer on the books and the records of the issuer.
I see. Well, certainly there's a lot of issues to consider, and it seems as if the role of the stock transfer agent is a critical one to keep things efficient. Any other advice that you'd give to entrepreneurs who are thinking about doing, raising additional capital in multiple rounds, and also trying to facilitate the ability for existing shareholders to sell shares in the secondary market?
Well, I think this all comes full circle, Brett. I think the overall approach has to be to get your records in order at the earliest stage to allow your record-keeping facility to have as much flexibility for potential changes in the capitalization or the restrictions on transfer of the company's shares. So if you do digitize book entry record keeping at an early stage, you get rid of stock certificates, you get rid of the back and forth of paperwork with shareholders, which in many cases will be needless. You will not have to call in old certificates when you recapitalize or re-legend. And in this day and age now with the Jobs Act allowing for companies having up to 2,000 shareholders of record remaining private for many, many years, it is incumbent upon the issuer to make sure that its record-keeping function is one that is facile and that is compliant with IRS regulations, including cost-basis reporting, abandoned property regulations of the 50 states, which relate to escheatment obligations, and all sorts of other personal privacy constraints that are imposed by the federal and state governments with which issuers themselves are going to be unfamiliar. That is why it's important to have a professional record keeper that is regulated and knows these requirements and deals with them on a customary basis. In the old days when private companies were capped at 400 or 500 shareholders, it was difficult enough. Now when you have 1,000 or 1,500 shareholders who may be on a shareholder ledger held by an issuer or its record keeper, it is way, way more complex, and the issuer should kind of get out of the way at the earliest possible stage to allow for the efficient processing of its exit strategy and any IPO. Because once an IPO is on the horizon, then your records better be in perfect shape, and your legending better have been taken care of at an appropriate stage so that it can go off in an orderly and effective way.
Right. Well, it certainly is excellent advice. Thank you both for joining us today.
Well, thanks for having us, Brett, and we look forward to seeing you at your conference and participating actively.
Terrific. That was Stephen Nelson and Michael Mullings from Continental Stock and Transfer Company, a New York-based transfer agent. Brett Johnson in New York signing off. Good day.